This program is more important than Donald Trump, Hillary, or Jeb Bush. This is probably the most important program you will ever listen to, so stay tuned. We're talking about stuff that is so important to you that very few people even know or understand. So please pay attention to this program. And today's program is about China. And most Americans don't even know what they think that's a plate or something you eat off of. And what we're seeing right now is the biggest economic shift in our lifetime today. So before we begin, we're talking about the U.S., which is number one, and China is number two. But when number one and number two, the biggest in world history, are in trouble, something's going to happen. And that's why I say this program is more important than my friend Donald Trump or Hillary Clinton or who becomes the next president or who's going to win the Super Bowl, which is what most people are interested in. It's really kind of funny. And so Kim was recently in Las Vegas, and she was talking to about 1,000 women, and she asked them how many realized that the stock market was crashing. And Kim, out of 1,000 women, how many were even aware of it?
I think maybe 4 hands went up.
Out of 1,000 women.
So they're not paying attention to it. And this was a day when the market came down like 300 some points, and nobody was even aware of it.
Yeah. So that's why I want you to pay attention, because what we're going through right now is Humpty Dumpty, 2 big Humpty Dumptys. One the United States and one China falling off the wall. And so please pay attention, because we have one of the best experts on this subject with us today. And you're going to learn a lot about not only what's going to happen, the good, but also the bad and what you can do. So our guest today is a longtime friend. He's a contributor to the Rich Dad whole program of financial education. Remember, we do not recommend stocks or anything like that. We're a financial education company. And Richard Duncan, I came across him when I was walking through Borders bookstores, which is like Humpty Dumpty gone. I was walking through Borders bookstore, and there was this little book called The Dollar Crisis, which came out in 2003. And for some reason, the hundreds of thousands of books, that book went, psst, psst, hey, pick me up. I said, oh, God, another book to read, So I picked up The Dollar Crisis, and boy, did it open my eyes to what's going on in the world. So our guest today is Richard Duncan. He's an author. He's an economist. But more importantly than that, he spent time with the IMF as well as the World Bank. And interestingly enough, he's an American, went to 2 great schools, Vanderbilt and Babson. But he now lives in Thailand, and he's been talking about China for years. He's been warning us, saying, hey, it's not as it seems.
And, there's a lot of people out there that talk about their opinions on China, and they have their opinions on Asia. But here we're bringing you Richard Duncan, who lives in Asia. He is an expert on China, and he is a leading economist. So this is a very, very special guest and a really special show.
So once again, this program is more important than Donald Trump or Hillary Clinton, because this has to do with what happens when number one and number two are in trouble in the world as they fall off the wall. So, Richard, I know it's 10 p.m. or so in Thailand, but welcome to our program, and thanks for giving us your time.
Robert, Kim, thank you very much for having me on. It's always great to talk with you guys.
Right.
Thank
and then
you.
You wrote a blog about this for Rich Dad, didn't you, about China? I mean, you've been talking about China since I've met you. But
Well, we were in Shanghai together at a Rich Dad event about 3 years ago, and it was completely obvious that the country was already beginning to go into crisis then. So I've written several blogs for Rich Dad, but the most recent one was on August 15th, called China Joins the Currency Wars.
And that's a very important. That's a very important.
Your listeners can check that out on your website if they're interested.
Right. Many people think it's a stock market and things like this. Really, what it has to do, where Richard and I join forces, and we always say the Rich Dad program, if you agree with me, you're intelligent. So Richard is very, very intelligent, and we've always seen it as a crisis of our currency, which is why I picked up Richard's book, The Dollar Crisis, in 2003. And in that book and his other books are The Corruption of Capitalism, The New Depression, and things like this, but he's always spoke about the illusion that China is the next savior. So Richard, tell the audience how you see this China crisis unfolding.
Okay, well, so the bottom line is this. China's economy is going into crisis now, and it's dragging the global economy into a new world recession. For years, China's followed a strategy of export-led and investment-driven growth. And now that export-led, investment-driven growth strategy is hitting a brick wall. It's in crisis. It can't continue having growth driven by rapidly growing exports because the rest of the world is in crisis and can't absorb any more Chinese exports. And meanwhile, there's no reason for China to keep investing, building more and more Chinese factories when no one has enough money to absorb the output from the factories already.
Well, years ago,
massive excess capacity across all of China's industries. Product prices there are crashing. The companies aren't making any money, so they can't repay the bank loans. And instead of being a driver for global growth in the world, China is now a big brake on global economic growth because China's imports are no longer growing. In fact, China's imports have been down every month this year by more than 10%. So China's gone into reverse, and it's now a big brake on the global economy.
But what you were saying years and years ago, when nobody was listening to what Richard Duncan was saying, once again, he's in Thailand right now. He's as close to the pulse of what's going on in Asia.
He lives in Thailand.
He lives in Thailand also. And what you were saying was that these guys were building factories to nowhere. In other words, they were importing all this concrete and raw materials, steel, and they're building these huge factories. But over 10 years ago, you were saying there's nobody inside those factories. They're not doing anything with them. But everybody thought, China's consuming the economic growth because people are busy, they have jobs. And then what happened is they built over 6 million condominiums that nobody lives in today. So the whole growth was nothing but this big illusion.
Well, that's right. By 2005, China had grown into the greatest economic bubble in history. It all started off well enough for China. When the Cold War ended, the United States started accepting exports from China. And this completely transformed China's economy. There was an enormous economic boom there as China exported more and more and more to the U.S. every year, and all the U.S. jobs were offshored to China. China's trade surplus with the U.S. went from zero in 1990 to $330 billion a year last year. So it flooded China with money. This money went into China's banks. They lent it out. That led to a massive property boom. They kept lending out more and more money. This created more and more excess property, and they kept building more and more factories, and they started drinking their own Kool-Aid in China. They really thought that they were going to keep growing at 10% a year forever. But now they've come up against the hard reality that the world can only absorb so many Chinese exports, and we've hit that point now. Europe is in crisis, and they can't take any more Chinese exports. Japan's in crisis, and they can't take any more exports. The U.S. is pretty much in crisis as well. So this export-led growth strategy is now a dead end.
But you said in the dollar crisis that this goes on every single time. I call it hot money. There was petrodollars, and Japan's economy blew up because all the U.S. dollars and dollars are flowing into Japan in the 1990s. And you predicted the same thing would happen in China when all this hot money from exports would flood back into China, and they would blow up also. And that's what you were saying, right?
That is exactly right.
History is repeating it. You're saying history is repeating itself right now.
Right. This is very much like what happened to Japan. Japan had a big trade surplus with the United States for a couple of decades. Japan blew into a massive economic bubble. That bubble popped in 1990. And now Japan's economy is no bigger today than it was in 1993. It hasn't grown for 2 decades.
Yeah, so that's why I want people to read The Dollar Crisis if you can. But there's also the book called The Corruption of Capitalism and The New Depression, The Breakdown of the Paper Money Economy. And this is the whole point of the Rich Dad program, as well as Richard Duncan. It's not really about the stock market. It's not anything about trade. It's the fact that we're running on basically counterfeit money. Would you say that's true, Richard?
Well, that's right. It's created an enormous worldwide global economic boom and bubble that's been going on for decades. And now we're really getting to the end of that global bubble, and there's a real danger that it's going to collapse into a new Great Depression.
Prior to this, only small countries were collapsing. Like, well, Japan's not small, but they're small as compared to the U.S. and China. You know, Greece just collapsed. Puerto Rico's set to go. Detroit collapsed. And so that's why it's very important you understand that this is really a dollar crisis. And that's why if you've listened to Rich Dad for years, we talk about, I use the date August 15th, 1971, the day Nixon took the dollar off the gold standard and we started to print money. And when you printed money, people get excited. See, people started borrowing, and the U.S. economy boomed, and Japan boomed, and now China is boomed, and they're all going bust.
Let me ask Richard, you made a point. You said it looks like we're going into a worldwide depression. Is that what you're predicting?
Well, so, the reason China is so important is because it's no longer buying more and more commodities from the rest of the world anymore, from Brazil, from New Zealand, from all the other commodity producers. And so they're not buying. The growth and demand from China has stopped and gone into reverse.
And that's why countries export. That's why resource countries like Canada and Australia is struggling too, right?
That's right. So commodity prices have now absolutely crashed. Not just oil, but copper and iron ore and all the commodities, even the agricultural commodities. And so all of the producers, all the commodity producing countries, their economies are going into crisis. Brazil's in crisis, it's in recession, it just had its debt downgraded, and all of the emerging market currencies are crashing. And so we have already entered a new global recession, and it looks like things are going to get worse before they get better.
And that's why Richard's book, The Dollar Crisis, people think it's about export and all that. It's really what happens when we use fiat currency, which is government-sponsored money, which the U.S. dollar, after the Bretton Woods Agreement in 1944, made the U.S. dollar the new gold of the world. And so this crisis is not just big, it's massive. And what I'm trying to say to people is something that most people miss. Like if you've read Rich Dad, Poor Dad, Lesson 1, Chapter 1, the rich don't work for money. And the reason I state this, and I want to say it, I would say 99.99% of the people miss this. You know, Kim and I were just in Sonoma. I met this nice young man. He's so excited, not young man, he's a little younger than I am. He's so excited because his daughter is going to get a PhD and she's going to get a high-paying job, and it's all because he read Rich Dad, Poor Dad. I said, that's not what I said. Why would you want a high-paying job when you're not supposed to work for money? But I want to let you know the idea of not working for money is not between the left ear and the right ear. People have been so brainwashed like Pavlovian dogs chasing the almighty dollar. So that's why I think it was around 2003 I came across the book, The Dollar Crisis, that explained what I've been trying to explain for years, that the crisis is caused by the U.S. dollar. The dollar is a corrupt currency. It has been misappropriated. It has screwed the world of its wealth. And that's why I wrote the other book, Second Chance. We came out in January of 2015. It's about the dollar. And we have the author of The Dollar Crisis, author and economist Richard Duncan, who went to Vanderbilt and Babson. He worked with the IMF and the World Bank, and once he caught on to the problem is the U.S. dollar, he moved to Thailand. So today he sits on the border of China. He's in the hot spot. He can see it differently than anybody else can see it right now, but he's been saying this for years. And everybody thought that China was going to be the big, big savior of the Western world. But what Richard has been saying for years, China is an illusion. It's not what you think it is. All this growth and all that stuff is not really accurate, and it has happened throughout history. As I said, the Japan economy blew up because of the U.S. dollar. The Chinese economy blew up because of the U.S. dollar. And now we have a global crisis, but this time it's not a third-rate nation. It's two of the biggest, China and the U.S. Would you mind explaining to the audience right now why it is a dollar crisis and how the dollar has set off this global economic boom that is now crashing?
Well, all throughout history, gold was money. And in order to buy things, you had to have some gold. So one country couldn't have a very big trade deficit with another country because it would have to pay with its gold, and it would lose all of its gold and lose all of its money, so it would have to stop buying things from other countries. But after the Bretton Woods system broke down, that was a quasi-gold standard, then the United States discovered that it didn't have to pay for imports with gold. It could pay for a lot of imports with just paper dollars that were not backed up by anything. And so for the first time in history, a very large country like the United States started running very massive trade deficits.
Well, simply said, the Bretton Woods Agreement technically made the U.S. dollar gold, that every country in the world had to trade in it, right?
That's right.
That was in 1944. So it was as the end of World War II. They knew Germany was defeated, and they said, well, let's make the dollar gold, basically.
That's right. There wasn't enough gold evenly spread around the world to simply go back to the pure gold standard, because so many countries didn't have any gold whatsoever. So they pegged the dollar to gold, and all the other currencies were also pegged at fixed exchange rates to the dollar.
So everybody had to trade in dollars, not gold.
But the dollars were considered as good as gold, and the other countries, if they obtained dollars, they could use those dollars to buy U.S. gold. And so it was effectively a gold standard still, up until the time it broke down in 1971. But then when it did break down, everything completely changed. The United States no longer had to pay with gold. It could just pay with paper dollars. And so it started running unprecedented trade deficits. The trade deficit by 2006, it had grown to $800 billion a year. That was 6% of U.S. GDP. And that meant that the rest of the world could export that year $800 billion of goods to the United States above what the United States bought from them. Nothing like this had ever happened before. So the trade deficit of the United States, the bigger it became, the more the global economy boomed. The thing is all the countries with the trade surplus, like Japan in the 80s, and then the Asia crisis countries like Thailand in the 90s, and now China, all the countries that had a big trade surplus with the U.S., so many dollars went into their economies that it blew their economies into bubbles. And that was fun while the bubble was blowing up. But eventually the bubble popped, and then they were in depression. And that's what's gone wrong in Japan, and that is what went wrong in Thailand in the 1990s. That's where I had my education in bubblenomics. I watched the bubble blow up here in the first half of the 90s, and that's where I had my aha moment. And then it became a worldwide phenomenon. The whole world was blown into an enormous bubble by its trade surplus with the U.S.
Once again, it's Robert Kiyosaki, the Rich Dad Radio Show. We're talking to Richard Duncan. He's author and economist. His book is The Dollar Crisis, came out in 2003. He's been a regular guest on the Rich Dad program. He has a blog at richdad.com. But what we're talking about here is very sophisticated stuff, so please hang on. And it goes back to why in Rich Dad, Poor Dad, Lesson 1, Chapter 1 says the rich don't work for money because money is no longer money. And what happened, what Richard was talking about, Japan blew up, Thailand blew up, and the problem is China is now blowing up. And everybody was really happy because China was going to save Thailand and Japan and Brazil and India, Russia, and all these countries. But now that China is coming down, what Richard is saying is the same problem that blew Japan up, a dollar crisis, is why we need to be afraid.
So, Richard, this bubble that's bursting, it's bursting all over the world right now. Is it going to reverse? Is it going to keep busting? Is it going to keep going down? What do you see?
Yes, it's bursting now, and it's the main place where we see that is in commodity prices. So commodity prices are crashing, and that means that all of the companies, that the mining companies, the oil companies, everyone involved in mining or metals or trading of these commodities or producing these commodities, they're all suffering. Their share prices are crashing, or if they're countries, their currencies are crashing. And if their currencies are crashing, then they have less money to buy things from China or from the United States. So world trade is falling very sharply. In dollar terms, last month it was down about 14% year on year. So world trade is crashing, and the growth in industrial production in the world has come to a standstill. Global GDP is slowing very rapidly, and corporate profits are being hit all around the world. And so finally now that's hitting the stock markets everywhere. The U.S. stock market is in correction, and it looks like it's going to become worse. Japan's having a very hard time with their stock market. Europe's doing badly this year now. With the stock markets going down, that means that people will have less so-called wealth, and that means they will spend less. So consumption's also going to drop. So it looks like the U.S. is about to move back into recession as well. And now the critical point will be, what are the policymakers in the United States going to do to prevent the U.S. from going into recession?
Once again, it's Robert Kiyosaki, the Rich Dad Radio Show. We're talking to Richard Duncan. He's author and economist, and his book is The Dollar Crisis, which I came across in 2003. But as Richard explained, in the dollar crisis is what happens when you print money. This whole world economy blows up like Japan did, like Russia's now doing. The world is going into the biggest economic crash we have ever, as a world history, ever experienced. Would you say that's accurate, Richard?
Well, so far, the biggest crash the world economy ever experienced was that of the 1930s. That it happened for similar reasons. That was preceded by the Roaring Twenties. And the thing that caused the Roaring Twenties to roar was the gold standard broke down in World War I. All the countries in Europe didn't have enough gold to fight the war, so they started printing a lot of paper money. That created a worldwide economic boom that we call the Roaring Twenties. And in 1930, all of the credit couldn't be repaid, and international banking system collapsed, global trade collapsed, and the world went into a recession that lasted 10 years.
And that's what gave rise to Adolf Hitler in 1933 or something like that. Is that correct?
And Japanese militarism also. The Japanese took over Asia, most of Asia.
In other words, we might be going back to war, which it seems like we might be. Or is that too far-fetched, or is ISIS our main target?
Well, at this stage, the difference between then and now. So that depression lasted for 10 years until World War II started. And when World War II started, then the U.S. government increased its spending by 900%. And that put an end to depression, and everyone had a job. Well, this time, the same thing happened. Bretton Woods system broke down. We went off the gold standard. We had an enormous credit bubble that lasted for decades. The bubble almost popped in 2008. But this time, they didn't wait for 10 years to do something. They started running massive budget deficits right away and started printing lots of money. And so that's how they've kept this bubble inflated over the last 8 years since 2008. They've had lots of fiscal stimulus, lots of monetary stimulus. So this bubble never crashed into a depression. But now they've reined back on the stimulus. The budget deficits are much lower now. The Fed stopped printing money last year, and so the stimulus isn't strong enough to keep this global bubble inflated anymore.
So you said
now the global bubble is starting to deflate, and if they don't do something, it's going to crash into a new depression.
So you said, Richard, it depends on what the U.S. does. What do you think they're going to do, or what should they do?
Well, so right now they're doing all the wrong things, and if they want to keep this bubble inflated, because the budget deficit is becoming smaller and smaller. Believe it or not, the U.S. budget deficit now is only about 2.5% of GDP, which is below the average of what it has been for the last 50 years. It's about half the level that it was under most of President Reagan's administration.
What does budget deficit mean to our listeners, Richard? You know, the trouble is talking like an economist. Most people aren't economists. What does a budget deficit? It means they're spending less money?
It means the government is spending less money than it was before. And when the government spends money, it creates jobs for people, and people have more money, and they spend more.
So when we come back, I want you to ask another. We are in a currency wars, and this is why I say again, Chapter 1, Lesson 1, rich don't work for money. What is the ultimate cause of this global crisis? Why it's going to affect everything we do today? You know, the world economy is collapsing. What we're talking about today is more important than Donald Trump or Hillary Clinton or Jeb Bush. What we're talking today is about why this crisis is coming, but more importantly, what you can do about it. And our special guest today, he's been with us for many years, is Richard Duncan. We've traveled the world together teaching, warning people that this was coming. I first came across Richard Duncan walking through a Borders bookstore, which is now a restaurant, and his book was The Dollar Crisis in 2003, where he predicted the global economic disaster with extraordinary accuracy. And he was always talking, not always, but he was talking about what happened when we print money. And he talked about how the petrodollars hit the world, the peso crisis, the Japanese crisis, the Thai crisis. And now we have China. China blew up into this big world economy. Everybody was happy. It made a lot of people rich, but it was based upon basically counterfeit money. So now the piper is here to collect. The grim reaper is here. And the question is, what are you going to do about it? This is probably the most important program you can listen to. And once again, I remind you, if you've read Rich Dad, Poor Dad, Lesson 1, Chapter 1 is the rich don't work for money. People cannot see the crisis because it's in your wallet. It's called the dollar or the yen or the euro. So with that, Richard.
And let me just say this about Richard, too. Richard is not just the leading economist, but he also lives in Asia. He lives in Bangkok. So this is not just a good opinion or theory. He's actually living it every day.
And he worked with the World Bank and the IMF, which most Americans have no idea what I'm talking about. So, Richard, give us the good news.
Please, something.
All right. Well, the good news, as ironic as this may sound, is everyone needs to understand that the government has been managing the economy since World War II, and they haven't been managing it very well, but they're not going to stop managing it now. And so if we had a laissez-faire capitalist economy, we would now be in a depression like the 1930s. The reason we're not is because the government once the bubble popped in 2008, the government reflated it with very large budget deficits, government spending, and the Fed printing a lot of money. Well, they're not going to stop doing that. They are not going to give up so easy. They're going to spend more money, and they're going to print more money. And when they do that on an aggressive enough scale, this current global recession that's now becoming deeper is going to get better. The global economy will begin to grow again for a while.
Because they're printing money? Just because they're printing money?
That's right, because the government's going to intervene again and have probably larger budget deficits. The government will spend more, and the Fed's going to print more money. It's going to have another round of quantitative easing. They don't say so. In fact, they say they're going to do the opposite. They say they're going to start increasing interest rates. But I don't believe that, because if they do, then we will have a depression, and they don't want that. So they're going to have to do the opposite. They're going to have to print more money. We're going to have another round of quantitative easing. This will be the fourth round. And so they're going to print money, and they're going to use that newly printed money to buy up financial assets. And that will push the stock market back up again. So what people should do is wait for Janet Yellen to approach the Fed chairwoman, to approach the microphone. And as soon as her lips begin to form the letter Q, that's when they need to buy stocks, because they're all going to skyrocket.
So doesn't that just push the problem down the road? Doesn't it just get bigger and bigger as they keep printing money? Don't we have to pay the piper at some point?
Well, at this stage, the bubble is so enormous that if it pops, no one alive today is going to live long enough to see the recovery. So I'm for kicking this can as far down the road as possible. They've just kicked it for 8 years. There's nothing to stop them from kicking it for another 8 years, and maybe 16, and maybe 24. And so that's what they're going to try to do.
Well, that's really good news.
So in order to make money, the trick is to figure out what the government's going to do next, because they are managing the economy. And what they're going to do next is they have two choices. They do nothing, and we collapse into a new world depression with very frightening geopolitical consequences, or they do something and print more money and push the stock market back up one more time at least, and we get another 3 or 4 years out of it, and maybe they can figure out some better plan in the meantime.
Please listen to this. The problem is the dollar. It's a very corrupt criminal, almost a criminal currency. Richard, could you explain what a fiat currency is for the listeners?
Traditionally, gold was money, and some banks issued paper notes that were more convenient to carry around. But you could take the note to the bank and get the money in gold for it. So all the paper money was backed up entirely by gold. But over time, we reduced the gold backing for the paper money to a smaller and smaller proportion. And then in 1971, we stopped backing money with gold entirely. So now the governments are free to create as much paper money, or fiat money is the technical term for it, as they choose. And they created $10 trillion of paper money between the year 2000 and now. And that doesn't count the money that the Fed has created, the ECB has created, or the Bank of Japan has created. Those are just the emerging markets. So if you add them all together, we are approaching something like $20 trillion of fiat money creation since the turn of the century.
That'd be like, that's like the world using a credit card and not able to pay for it. Is that basically a simple way of getting people to understand we're writing bad checks?
But with so much money being created, such a limitless credit card that it transformed the world economy. The world produced more and more things to allow people to buy with all of this credit.
Right. I just, so what's happening, and we talked about Asia right now is blowing into a bubble that's collapsed. What's happening in Europe? Greece was the first casualty.
Yes, so in Europe, it's a similar story. Everywhere in the world, credit, once we stopped backing dollars with gold or money with gold, credit exploded. And the very rapid growth in credit created rapid economic growth everywhere. But we've hit the point now where credit can't keep growing because the people just don't have enough income left
to pay it back.
To afford credit.
So let me ask this. This is another way of looking at it. One of the problems I saw with Greece is they're now borrowing money to pay the interest on their debt. Is that pretty simplified enough?
Right.
And isn't that what the U.S. doing too? We're borrowing money to pay the interest on our debt?
You know, it's been very interesting that the amount of debt, the amount of interest that the U.S. government is paying is actually becoming smaller.
Oh.
That's because the interest rates on government bonds have fallen from 8% to practically nothing,
right?
Something like 2%. And so the interest, even though the amount of debt is becoming larger and larger, the interest on the debt, the interest rate is so low that the amount the government's paying is becoming smaller. And on top of that, the Fed has bought up almost $2 trillion of government debt. And when they do, the government has to pay the Fed interest on that debt, but at the end of every year, the Fed just gives all of its profits right back to the government. So the government doesn't have to pay any interest on the money that the Fed has created and used to buy treasury bonds.
Right. So what does this mean to the average person like you and me walking down the street, going to Walmart?
Well, it means that we are all on government life support at this stage because of mismanagement of the economy going back for about 50 years. An enormous worldwide global bubble is formed. And if left to the forces of supply and demand and laissez-faire, it will implode into a new depression. And it's only the government intervention through very large government spending programs and paper money creation that this bubble's remaining inflated. And some people believe that we should take the medicine now and let the bubble crash. But what they don't understand is that if we are at the point now where the crash would be so painful, it would potentially be civilization destroying.
Once again, Robert Kiyosaki, the Rich Dad Radio Show. We're talking to economist and author Richard Duncan. He's the author of The New Depression, The Breakdown of the Paper Money Economy. Everybody should read that book. Richard's website is richardduncaneconomics.com.
And Richard, let me ask you this. Here in the U.S., there's a lot of talk of raising wages. Everybody wants to raise wages, but the economy's coming down. What's your point of view of what's going to happen in the U.S.? What's going to happen to an individual's wages?
Well, wages have really been stagnant now for decades, going back almost all the way to the 1970s. That's because of globalization. We used to produce things in the United States. There were millions of manufacturing jobs, and people earned a high wage in those manufacturing factories. But most of those jobs now have moved to countries where the wages are just about $10 a day or less. And so that downward pressure on U.S. wages is really one of the key aspects of this global crisis. If wages don't go up, then consumption can't go up. And there's no point in producing more goods if people can't afford to consume more goods. So the outlook for wage growth in the U.S. continues to be very bad because globalization is still just really in its infancy. There are hundreds of millions of people around the world who would be glad to work for $5 a day.
What would you say to the average person? What can they do now?
In the short term, they can try to anticipate what the Fed is going to do. because when the Fed announces QE4, there's going to be a very big stock market rally. So for a long time, my advice has been when the Fed is printing money, that's when people should be invested in stocks. And when the Fed stops printing money, that's when they should take their profits and wait for this stock market correction. So for example, in 2013, the Fed printed more than $1 trillion and the stock market went up 30%. The next year, the Fed printed $500 billion, half as much, and the stock market went up 11%. Well, now, a year ago, the Fed stopped printing money, and now the stock market hasn't gone up any since then, and recently it started having quite a severe recession. So the stocks are going to keep falling until the Fed starts printing money again. And when it does, and I believe it will, then they're going to go up sharply again.
And once again, Richard, I want to thank you for contributing to the Rich Dad website. And everybody, the most important thing is to pay attention. It's like we started this program when Kim was speaking to about 1,000 women in Las Vegas. Only 3 had any idea that the stock market was crashing. And most people have got their heads up to you-know-what. And so that's why, Richard, I thank you for contributing to us, always keeping us informed. We'll have you back as soon as possible because this situation is not going away for a while. You have a book, you have a blog called Macro Watch, and you have a special discount for people who support Rich Dad. What is Macro Watch?
Yeah, that's right. Macro Watch is a series of videos. I make up PowerPoint presentations in a video format every couple of weeks, discussing what's happening in the global economy and how that's likely to affect asset prices. And I upload it to my website. And so members of Macro Watch can watch these videos. There are now 17 hours of video content.
And as we talked about earlier, it was that there was a Bretton Woods Agreement in 1944. The average person has no idea what that meant. It was held in New Hampshire. And then we had, in August 15, 1971, Richard Nixon took the dollar off the gold standard, and we began printing money, which causes great economic boom and a currency war. So once again, thanks to Richard Duncan. So this is a tough subject for most people to understand. But please remember, Chapter 1, Lesson 1 in Rich Dad, Poor Dad. The rich don't work for money. There's a reason for that.
And one of the main things I took away, my eyes lit up when Richard said he wants the government to keep printing money. Either it's basically we're going to print money or we're going into Armageddon. I mean, that's kind of was the bottom line. So it was pretty fascinating. So yeah, please listen to the show again because there was a lot of great information.
And at Rich Dad, years and years ago, we did a book study on the dollar crisis, which came out in 2003, and it was really tough. I don't necessarily recommend or not recommend the book. If you're fairly smart and you can absorb and read well, Dollar Crisis is a fantastic book. But it explains what happens when the dollar became the new gold in 1944. Every place the dollar went, it created these false boom economies. And everything was fine until China comes along. So the reason we play Humpty Dumpty, when the dollars flowed into China, it created this boom economy, and now the boom is going bust. That's why it is important. The most important thing you can do is listen to Rich Dad. We don't make financial advice. We don't recommend anything. But it's really to be aware of what's happening, why it's happening, to see things the average person doesn't see. And that's your greatest advantage, is to be aware when the other person is sitting at Disneyland licking bonbons. So you can submit your questions now to Ask Robert, probably the most popular part of our program, and submit your questions to AskRobert@richdadradio.com. So Melissa, what's the first question?
Our first question today comes from Angras in Halifax, Canada. Favorite book, Midas Touch. It says, I have a small cell phone accessories and repair business with 6 employees in Canada. I am not into the stock market and I really have no interest in that. But can you please help us to understand how the China crisis will affect regular people like us and how we can protect our jobs and businesses?
Well, the most important thing you can do is listen to Rich Dad Radio. I would listen to this program again and again and again until it sinks in. Please understand, money is invisible. You can't see it. The second thing is I'd be very aware of Canada because, I love the Canadian people. But you guys got pretty cocky, during the shale oil boom and all that. But Canada is in the same category as Australia and New Zealand. You're resource export-driven economies. Now that the Chinese and they are already not accepting more resources from China, that means your little cell phone business will suffer, and so will your employees. So the most important reason an entrepreneur should study and pay attention is, number one, you have a huge responsibility to take care of the future of your employees. And when I meet entrepreneurs who are not studying and not really caring about what's going on in macro economy, they're really screwing their employees because they're being bad leaders in the whole thing. So I would say the most important thing you can do is I wouldn't close off the idea of the stock market, but I would be saying I, as an entrepreneur and employer, will invest more in my education so I can do a better job of protecting my employees. You'll always have businesses because people will continue to use cell phones. But the question is what's going to happen in the macro of the world as well as Canada.
No, I think exactly right. You've got to be more educated, be more aware, figure out what's going on. Because I think about a cell phone accessories business and repair. Maybe as the economy gets worse, more people are going to go to repair than buying new phones. It might be a good thing. Do your products come from China? There's a lot to talk about. A lot of factors that go into a business. But the most important thing is what can you do personally to grow your business and take care of your staff.
So next question, Melissa.
Our next question comes from Cameron in New Zealand. Favorite book, Unfair Advantage. My wife and I are preparing to start investing in real estate in the near future. However, given that stock markets are teetering on collapse and there is a real estate bubble in this country, should we invest and get some cash flow started as soon as possible, or perhaps wait a little longer to take advantage of likely lower prices?
As I said, New Zealand, Australia, and Canada, I love the people in that country and all that, but I worry about them. You guys are resource driven. I remember when the Aussie dollar was worth more than the U.S. dollar, and it collapsed again. So the same as the Canadian, the loonie was like $1.10 to the U.S. dollar. Now it's back down again. As Richard Duncan says, we're in a currency wars. The average person, I don't care what country you live in, really has no idea what a currency war means. What it means is that the country has to devalue their currency. They have to make the currency weaker, less valuable, because if they don't devalue the currency, then your exports dry up. If your currency is very, very weak, people will buy your products. So it's really what I'm doing my best to say to people. I talk about real estate, I talk about stocks, but what Richard Duncan is saying, it is a currency problem, not real estate or not stocks. And so if people could pull their heads out of their butts and realize it's something they cannot see, it's this thing called money. Once again, that's why in Rich Dad Poor Dad, Chapter 1, Lesson 1, the rich don't work for money. So you've got to figure out what is the true economic value of the stock market or the real estate. Kim and I own a lot of real estate, but there is a pure economic value to it. In other words, somebody is going to live in it, and they will give us money for that. A lot of these idiots go out there, they just buy real estate that's so expensive. Nobody wants to live in it. And that's what happened in China. They have reportedly 6 million empty units, and they have whole cities that are empty. I went there, and there was shopping centers that are completely ghost towns. And so with somebody standing, I said, well, should I invest in real estate? I mean, the prices are really low. I said, yeah, if you're an idiot, buy as much as you can. Comments, Kim?
Yeah, I just take off on this one little comment that Cameron made. He said, or perhaps should we wait a little longer to take advantage of lower prices? I think there's also an excuse in there going, oh, well, here's a reason I shouldn't invest because I don't really want to invest. So I'm looking for an excuse not to, because if you're going to invest now in real estate, you do have to be more diligent. I mean, do you really want to get into this game of real estate? Do you want to take it seriously? It is a business. It's not a hobby. If you're going to do it, you're going to do it because there's always some niche out there or some deal that you can do. But you're going to have to be more diligent. You're going to have to be smarter. But don't use the stock market or the economy as an excuse not to do something.
Well, let me give you another point of view on this thing. You see, if the New Zealand dollar gets weaker, but your economy stays exporting, then real estate goes up.
Yep.
Do you understand? But there's no answer to it. It's always going up and down. That's why Macro Watch from Richard Duncan at richardduncaneconomics.com, your job is to pay attention, because the reason we play Humpty Dumpty, this is not only a small country like Greece going down. This here is number 2 and number 1, China and the United States going down. And as Richard said, the odds are they're going to start printing more money. So that might mean real estate might go up more, and it might not. Or stocks might go up more, and stocks may not. That's why if you've read Rich Dad, Poor Dad, I only invest in cash flow. What is that real estate really worth? The thing that most people miss is that today interest rates are at an all-time low. What does that mean? Interest rates being low means the government wants you to borrow money. So if you can borrow money to buy good real estate that produces income and will produce income into the future, then it's a good investment. But you've really got to start paying attention and study more, be aware of macro as well as micro. New Zealand is a rich country in resources, and it'll do very, very well because I think it's got a great economy, great government. But it doesn't mean you just buy blindly like an idiot. So don't be an idiot. Pay attention. Next question, Melissa.
Our next question comes from Kevin in Cleveland, Ohio. Favorite book, Rich Dad, Poor Dad. He says, Robert, I am 25 years young and have been paying into a 401k for almost a year now. How can I avoid a big loss on my money in the future?
Once again, don't ask me about that because I think anybody who has a 401k is stupid personally. But it doesn't mean that you shouldn't have one. Now, if you want to get out of it, you better find a place that is better than the 401k because you will pay a penalty. So that's why I'm saying it's not about the 401k, it's not about real estate or the stock market or being an entrepreneur. It is being aware of what's between your ears, your left ear and your right ear. Because what you do with your money is ultimately dependent upon how smart you are. Like Kim and I borrow hundreds of millions of dollars, but we didn't start that way. And I understand the economy. I study it. I listen to, Richard Duncan and I are good friends. We're going to be traveling through Asia pretty soon together. I hang out with guys like him. Well, that's why I have the Rich Dad radio show so you can pay attention. You'd better know what you should do with your money and what's best for you. The 401k is really good for most stupid people. That's what I want to say. Getting out of debt is good advice for more stupid people. But if you don't want to be stupid, then pay attention. That's what I have to say.
And I just have one comment for Kevin is if you're paying into your 401k, how can I prevent losses in my 401k? You cannot. You can't. If you're going to pay into
Yes, you can. There's things you can shift.
In your 401k?
Yes, you can shift in and out of. Okay. You can shift in and out of mutual funds that you can go to the Prudent Bear and all that. Okay. There's things you can do, but the thing is, if you don't know what to do with it, then you really are stupid.